Okay, welcome back everyone to our second session of our day of our bootcamp. So as we talked about yesterday, we talked about the learning curve, we talked about the various types of trading and what's based on facts and speculation, etc., and what actually is based on making money. Good. Then we talked about the three forces rule or formula that should be memorized as our names. Good. It's important. And then we talked about the base foundation of the market. Then we talked about basically shifting points, talked about like the bows, change of character or shift of behavior too. Then we talked about all the different types of time frames from the monthly to all the way down to the minute and how we can utilize time frames, right? Talked about sessions, the importance of sessions, and we even had a couple of case studies about sessions and which session should we use. And remember, everything should be built around your life. You don't build your life around everything. So if you live in London, you gotta just be trading London. So you be trading early in the morning and you move on with your day too. New York the same, agent the same, etc. Now, if your agent advises you to trade another session, basically. Then we talked about supply and demands coming from all time frames, monthly, weekly, daily, 4H, 1H, all the way down to 1 minute, which called recent supply and recent demand. Talked about liquidity pools, what they represent, the definition of them too. And we talked about the Newton third law. If you're interested in physics, you can pretty much apply lots of physics into trading. Good. We talked about the first touch, the rule of first touch, and what does it mean and what kind of advantage we take out of the first touch too. Good. In case if we are wrong direction wise or entry wise, whatever. However, today what we're gonna cover the bus theory. Bus theory is something I invented. In fact, everything I gave you is my own preference. Good, my own stuff. So the bus theory is something, is a funny theory, which is based on real life that you can apply in trading too. Then we're going to talk about the entries models, different entries coming from different shifting points. And then we're going to talk about behavioral trading that we discussed yesterday, and we got into the behavior of candles and how you understand the behavior of candles, getting even into the lower time frame to understand the deepest details into what's happening inside that candle or what already happened inside that candle or inside a certain level or a certain demand or supply, etc. Good. Then we're going to talk a little bit about psychology. Psychology, it's, as I mentioned before, 99% of the game is mental. It's psychology. Good. But as I mentioned before too, with just a break and retest strategy, you can be making money, or system, you can literally be making good money, but it's all about mentality and psychology. Yet, and then we're going to talk about management. Under management, we're going to talk about risk management, the way I do risk management, which is a unique way of me doing risk management. And I'm going to talk about trade management, the actual deal management. And then we're going to talk about how we're going to build a system that works for you based on what you do in your life, whether you're employed, unemployed, whether you live East Coast, West Coast, I don't know, you live in Asia, Europe, or like the Middle East. That's it. So let's get started with the bus theory, basically. Let's get started with the bus theory. So the bus theory is just a bus. You get a street. You get a bus. Pardon my drawing, it sucks. And you got first station, second station, and you got the third station. Good. And what you want to do is you want to go from station 1 to whatever, station B or C. right? So what you do is, bus is driving in the middle of the street. Are you gonna wait the bus till it stops so you get in it, or you put up in the middle of the street, you get to get in the bus, or you wait the bus till it stops and open its doors, good, for you to get in it and move forward? Let's start with this. So what are you exactly gonna do? Yeah, I know it's kind of like a dumb question and it's a funny theory, but believe it or not, this is actually what you do in trading, and that's why you lose money in trading too. Because you don't treat trading as a bus. So what is it that you're gonna do? You're gonna put up in the middle of the street, get in the bus, or wait the bus till the bus stops, opens the doors for you to get in it. I need answers. You got 25 people answers. Throw myself under the bus. This is a perfect answer. That's how you liquidate your money. That's how you get zero in your trading account. Yeah, I know, man. What if there is no other bus? What if there is no other bus? This is the last bus coming. We don't need to outsmart ourselves. Good. Just like make it simple. So you're gonna wait the bus and the bus stops for you to enter in the bus, right? So what's the difference now? Exactly. Logically, we wait, but what happens is another thing. Good. So what's the difference between this, the bus theory, and a trending market? That was setting, then shifted direction or shifted the behavior, and it's now pushing up. So what happens is you got up to 60% of people who are gonna rush and be buying here, which is gonna create more volume and liquidity for price to fall down. And then as it's approaching down over here, you're gonna have more people buying. It's gonna keep on pushing more further down and then shift. Right? All right, so the stops, the bus stations are your critical points. Are your supply and demand. Those are the stations. The bus is the trend. The bus basically is the trend. And you basically is the trader who's going to execute the trade. So the trade is you. Make sense? Again, it's simple. I know it's funny. I mean, it's kind of stupid, but somehow everybody does it in trading. Somehow, literally, whether you're professional or whatever, you always do that. And this is the one thing that's stopping you from being consistent, because you're stacking more as it's keep on going into drawdown, you're stacking more, all of a sudden you're out of money. Yeah, definitely. So the way I like doing it is first, I give the theory, Good. It's first I give the theory, and then we get a case study on it. Yet, and then we get a case study on it. So that's the first. That's number one. Good. So you got in the bus from station 1 to station 2. And then you might even shift the bus, take another bus to go to station 3. Right? Same scenario with the train too. You can be selling, then it reaches a weekly demand, for instance, as we discussed yesterday, so means market shift, market shifted. You get into another bus, you get out of the bus, you get into another bus to go to another direction. So let's look into case studies. No, there is no particular reason. Keep repeating the same topic. Said yesterday, this is a whole is is demand, right? This is a whole liquidity pool, sensitivity area, demand, whatever you want to call it. Good. Going to the daily. We can see that this over here is the recent one, right? Going to the 4H. We can see what? This is the most recent demand in it, right? Makes sense? It's not just like marking up the open or the close, whatever. It's the week. It's the whole week. As we discussed, as we get into the lower time frames, we can see more details inside those weeks, right? Now let's continue with the bus theory. Perfect. So this over here is a weekly demand, right? This over here is a weekly demand. And as we discussed yesterday about weekly demand and a monthly demand is what? It's a shift point compared to other time frames, right? It's a shift point that produces way more pressure and magnitude force-wise, right? Yes, no, please. Don't have confusion. Perfect. Yeah, so let's apply our bus theory, basically. Let's apply our bus theory. Good. So on your way down, you had this station. You had this station. You have this station. You have this station. Again, you have this station. You have this station, which is coming from this demand over here, right? All the way down to where? To our weekly demand, right? That's where you gotta shift the direction, take another bus that is gonna go into another direction. So notice first, this was your first station that you got in, right? This was your first station that you got in, and which is based on which rule? The first touch. Remember, everything we discuss is connected. Good. Everything we discuss is connected because everything we do is based on elements that flows together to create a flawless system. So now this point over here gonna be what? Or your second station, right? This is a minute time frame. So all of these critical areas that we're looking at, that shifting the direction coming from where? 1H or 4H, right? Because if it's coming from a daily or a weekly, then you're gonna see the kind of rejection you're gonna get from there. And you're going to be prepared for it because you already understand that, okay, this is coming from here. This basically coming from where? This basically coming from a weekly demand. So I understand the kind of magnitude and force that coming from this demand, right? So for instance, that's what we're talking about. Bus approaching, bus opening the door, giving you a window. You're getting in. Again, bus giving you another door open, you get in. You don't just start selling blindly. Again, bus give you a window. First validated the demand, gave you a window. Again, why is there a magnitude here? Look at the momentum over here. And it's supposed to, right? A scenario where price on the micro side, not the macro side, changed direction or shifted the behavior. Again, station. This kind of station, you can compare it to the center of the city station where you got like tons of buses parking there, waiting. It's like you got like a longer period to wait, you got longer window for opportunities, wherever. Good. Now notice the price behavior when approaching a weekly demand or a daily demand. You see the difference. Look at the size of the candles. Look at the magnitude of the candles. This we're talking about 100 pips, almost. 1, 2, 3 candles. You understand the difference of forces between supplies and demands with different time frames now? And even the way where you get, or the point where you can get a particular price you buy at, and instead of just a set of prices. Which again comes from the region of that critical point, basically, which again comes from the region of that critical point. You gotta understand where the region is coming from and what's the recent activity in that region and where the most volume was produced from that region to. Right? Yeah, if you got questions, please ask. If not, so we move forward with our next model. Yes, basically. London to New York session. You're right. You're doing your homework. Yes, sir. Ask. I like questions. Orally, yes, sir. All right, sometimes the price reaches the region but stops and moves to other direction. How do you know the price will continue in the same trend or above the candles? That's what we discussed yesterday. That's when we utilize the higher time frames, right? That's when we utilize the higher time frames. So in this instance, we're gonna give a case study on it too. In this instance, we have 1, 2, 3, 1, 2, 3, 4, 5, 6 bullish candles. 6 bullish strong momentum candles compared to the rest of this trash, right? So what does that mean? So usually, a trend or a wave got 5 to 6 candles in it. Good. In the direction, momentum candles in the direction of the wave. Good, strong momentum candles. However, at the same time, we got price approaching the supply. If you don't understand why this is a supply, we can discuss it too. Show the region of it and why it's considered as a supply. Good. At the same time, we said we got a bullish wave already approaching the supply. And we got our demand, right? Let's bring the daily at the same time. Yeah, I'm gonna do that. Good. So on the daily, first of all, this is our daily supply, right? On the daily, this is our daily supply. First of all, right? Previous day, which is this wave, through our sessions, this was the previous day, which was this daily candle was bullish, right? And this daily candle liquidated this daily bulls, right? Makes sense? So what's the job of this daily candle? What is this daily candle is gonna do? It's gonna go up to this daily supply, right? It's gonna go up to this daily supply, right? But however, to go up to this daily supply, it needs what? It needs gasoline for your car to drive or to function properly. Needs gasoline, right? Needs benzene. Chart wise, we need liquidity, we need orders, right? We need liquidity, we need orders. So where is that liquidity is coming from? The proper liquidity to drive the price up, where is it gonna come from? Just look at the daily, just move with the daily, use your eyes, use the foundation we talked about yesterday, and just use your eyes. Not your brain, just your eyes. If price coming here where you marked, I ain't gonna be buying. I ain't gonna be buying because it just liquidated this. What's the recent activity? Why did you ignore this? Why did you ignore this bulls basically? Why did you ignore this bulls basically? And we're talking about inside this bulls, we got this recent demand over here. Yeah, exactly. Just the daily. Just the daily. So we need more details inside this daily. That's why we had this over here as a recent supply, or sorry, or as a recent demand inside this liquidity pool. Let's remove the liquidity pool because now we know the prices. Now we got two recent supplies and two recent demands, basically. So this daily candle closed here. And looking at the daily gotta be coming around this here. Right? right or not? Waiting for answers. So I just don't keep on repeating. Perfect. So from the daily, it's matching up with what? It's matching up with the hourly too. It's matching up with the recent liquidity pool, recent demand we got, which is opposed to us. Well, we got a deep liquidity pool in it, got two recent demands in it, two recent demands, which are prices in it, right? And at the same time, we got what? We got a recent supply over here. Same time, we got recent supply over here too, which was rejected from here, and we still don't know whether it's gonna be liquidated or not. Right. So at first, you got your first buyer, taking it all the way up here. Then got rejected. That's when you say like, okay, I'm out. Right? Second time approaching your buyer. You'll be buying. And we also talked about why we didn't buy again this one here, but we bought this one here. Scrolling to that forage. We talked about the behavior of this forage yesterday and how is that confirmation for this drop. We even discussed why didn't we sell this candle, but we sold this candle to this boss over here. And we didn't sell this candle, but we sold this candle. We talked about all of this yesterday, right? Talked about the behavior of the candle. Because it needs magnitude, it needs force. Where's it gonna get the force from? Forage daily. Look at the daily, look at the lift on the daily. We got absolutely nothing. On the forage, however, we got liquidity. But is this liquidity gonna affect the daily? Yeah, definitely. Therefore, during the day, this data is gonna be bullish, bearish, bearish, bullish, etc. because it's ranging too. Good. But overall, is the forage gonna affect the daily? Just this question, yes or no? Is the forage gonna affect the daily in a closure manner? But if you go to the 1H, did the forage affect the 1H? We talked about this yesterday. The magnitude of time frames and what time frames, what each time frame affect. Right? Yes, sir. Yes, sir. You know, when I'm trading, when I'm basically trading, I got my daily forage. 1H is already here. 30 minutes. 5 minutes. 1 minute. That's what I'm scalping. So, but the most critical time frames for me are daily, forage, 1H. Then the 1 minute basically just used for execution. And to make the supply area or the demand area more precise or and accurate. So instead of having 60 pips stop loss or like a demand, okay, I understand like the current case study we gave that I can chunk this 60 pips into two areas. Instead of having 60 pips, no, I'm gonna have 20 pips, and the lower price, I'm gonna have 15 pips on it, etc. There is nothing, again, it's all variables. You can't just make everything based on a fixed rule. It's variables. I don't pretty much understand the question. Yes, based on what I determine my stop losses on the time frame. So let's give this. Let's delete everything. So let's give this. So market gonna open Monday. You're gonna be pushing up. What I'm going to be doing is I'm gonna sell 1858.4. Coming to 1858.4. I got this, right? I also got this over here. So what's the most recent activity inside? Is this over here. Right? Stop loss. Entry, stop loss, wherever. TP. Based on the recent movement of the market. So this is probably gonna be the bows. Then my entry, my TP, my stop loss. I don't put it less than 12 pips. So I give space to spreads, etc. Some brokers, they do give you 0.5 on buys and 0.5 on sells. So you gotta calculate that. And if price was having a really huge magnitude, my push through this and go to this too. But however, what's the major idea of this of next week too? What's the major idea of this next week? What's the major idea of next week? Lower wick. Bullish candle. So the sell that we're gonna sell basically is the lower wick of the weekly candle. Again, the weekly candle takes 5 days to develop to. And again, going to the daily too. Going to the daily too. We're still bearish. We didn't change behavior yet. Good. We didn't change behavior. Yeah, we came out of a weekly demand. We shifting strong. But still, gotta break this previous high, create a higher high. So for us to understand, like, okay, we're buying two, and this matching with what? This matching with the monthly candle two. This matching with the monthly candle that is closing in 10 days, almost 2 weeks. So instead of speculating and saying maybe, Saleh, you know, we just follow, we just follow what's up. Just keep on following the market. Trust me, this way you're gonna make way more money than just speculating. Yeah, scenarios ready. This is important. Because once you have your two scenarios ready, good, that's when you don't get lost in the sauce. Exactly. So now we're done with the bus theory, basically. Now we're basically done with the bus theory. Everybody understood it. It's all clear. Yes, no, please. Oh, which last step, Durham? Please, man. Okay, yeah, as we said, we're still bearish. We're shifting. This might flip into a range, especially that the monthly is closing in almost 2 weeks or 10 days. So we got five, now five, we got five, two, three, we got 7 daily candles to develop to. Good. No, bro, no. We're taking a break now. 10 minutes coffee break. I need to drink tea or something. I need to drink tea. Okay, guys, 10 minutes break. Tea break or coffee break, wherever you prefer. See you in 10 minutes. So, guys, I'm back. I'm back. You all here? You all ready? Where the rest? Me coffee. Nah, I made my tea. You're good. Okay, we finished up with the bus theory. Now it's my favorite actual part in trading. So during yesterday and today's session, we cracked a little bit into entries, we cracked a little bit into entries, the way we mark up our chart, the way we study the behavior of the candle, etc. We cracked a little bit in entries. But what's different about the way I enter is not just like precedent, but it's actually the way I name my entries, because each entry got a category. I got like different categories for different entries. So I understand and I don't trip while trading and I don't get actual carried away while trading. You get it? Which is important. It's the same way now when you guys discuss the fact or ask me about how do you know that it's coming down and then pushing up, not pushing all the way down, right? So this kind of entry got a category for it. This an entry got a category for it. This entry got a category for it. Good. So let's start cracking entries step by step. Yep. Start cracking entries step by step. For that, let's choose the 4 hours. Just less noise, less details, which is required. So at first, we have this entry, which is a shift under a category, a shift. Why is it a shift? Why is it a shift? This is a question, guys. Why is it a shift entry? Yeah, big momentum, weekly demand. Yeah, right. Right. Go on. Nice. We start cracking answers, right answers from the plate, from the beginning. That's good. Direct right answers. This is perfect. Good. So this is a shift entry. Good. This is a shift entry. Good. What do we call this entry? What do we call this entry? Now forget the low of the month. Forget the low of the month. A boss plus, it's a boss plus corrective. So first category, we got a shift entry. Kind of entries that coming from where? From where? From daily, weekly supply demand, which cause a shift into the minor. This is not minor, but let's put it like intermediate trend. Good. And this was the previous high. We got a new high, which is a boss and a corrective. Why is it a corrective? Because we got a bullish wave. And then after that, as we discussed the foundation yesterday, what we need is we need a correction for it. It's the same way you're driving all the way. You're driving all the way from the UK. You're going through the Netherlands, you're going through France, you're going to Germany, wherever, Switzerland, wherever you're going through, you know, no, it's actually Netherlands, Belgium, Swiss, Italy. But the road is not actually like this because during your way down, your way going down, you need to rest. So you might have a gas station on the same way, you rest, or you gotta take a U-turn, go a little bit back up and take coffee, gasoline, wherever, use a bathroom and keep going down, etc. during your way, etc., etc., etc. And this is the same goes to the chart too. The same goes to the trend. Because you as a person, you need food, you need water, the car needs gasoline, oil, the trend needs liquidity. The trend constantly needs liquidity. Good. Makes sense. So the second one, the second category, which is a boss plus corrective entry. So the third entry, what is the third entry? The third category. No, not price. What's the category of the third entry? Continuation. Yes, sir. Third entry is a continuation entry. Continuation entry. Good, 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 good. What about this entry? Okay, I'll explain in a bit. This is also a continuation entry because it's inside the continuation. It's inside the new impulse, inside the new wave, right? Makes sense? Good. What about this entry? What about this entry? It's a corrective, not a boss. It's just a corrective. It's just a corrective. This one here, this was a boss plus a corrective. As we said, it's about elements. Those elements can come together at once. There are sometimes the two elements can just come in handy at the same time. Good. So this is a corrective entry. Why is it a corrective entry? Because it's a correction for this impulse. Makes sense? Okay, what about this entry? Continuation and a boss. It's a boss and it's a continuation for the trend, right? Makes sense, fellas? How is your boss? Jesus. Now, is it still how is that boss? Perfect. 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 Yeah, the illustration of a trend is it's not this. This is educational purpose. Like this, and this. Okay, let's mark it up. Let's go to the 55 minutes. Sorry. This is a trend. Yeah, it is lower lows, lower highs. But what's inside those waves? What's inside those waves? That's what you get from the lower time frame. I remember this 1 minute is the lower time frame. But remember, at the same time, the 4H is a lower time frame for the weekly. You get it? Okay, ask about the same both that we've been discussing for ages. Good. No, not you, Gabrielle. Yeah, please. This one. Okay, Gabrielle, if you remember how we marked up our charts yesterday, it's like a top-down analysis, wherever you want to name it, but in a deeper sense. Good. So we got it from the daily over here. We got it from the daily over here, going back to the 1H. This is my boss. This is my boss. The recent price or the recent supply in this boss is this price. Yeah, not this. This. This whole rectangle. You get it? This whole rectangle is a boss. But what's the recent price inside this both? It's this. You can see the behavior. You don't need to use your brain, just use your eyes. I move with steps. Got demand, rejected, bullish candle, boom, liquidated, then higher wick, then boom, dropped. So what's the most recent in this? Yeah, Gabriel? So now what's the most recent in this? Illustrated, please. What's the most recent activity or prices in this? Exactly. Perfect, perfect, perfect. This. So if you want to be more preciser, you can also be taking this and this. Over here, this was the window of the recent activity, you know? Is it clear now? Oh, perfect. Take a minute, guys. Consume. Yes, consume. So entries, 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 entries. We're done with entries, right? More questions about entries? Any more questions about entries, guys? Okay, let's look at one more complex. Let's look at a complex example. Let's basically look at this complex shape. Good. Let's basically look at this complex one in the detail. So this is our bows, right? This is our bows, right? And this is the recent supply in it, right? Momentum down, exhaustion, boom, down. Back to work to recent demand, right? However, news. So here is an example or a case study is when you get what? Remember, three forces: time, New York Open, price, demand, news. Boom. Good. Backward to the recent supply. Push down. So far what we got is we got this candle, right? We got this wick as a recent what? As a recent demand, right? Because after this candle, you'll be expecting price yet to exhaust and push back up again, might even break up or just come back to the recent supply, right? Okay. So consolidation, new daily opened, pushed up because this is still a demand, but still we got a valid recent supply, right? And since this is a validation, forget about this because this is the lift now. This week is the lift. So what's up with this? Right? Bearish closure. What's the behavior of this candle? Now let's study the behavior of this candle. We got higher wick coming from this recent supply, from this recent validation, from this recent supply too, right? Higher wick, bearish closure, it's a doji, and a long tail to the downside. What does this mean? When you say a doji, what does this mean? Such a doji. It's a liquidity candle. We got liquidity to the downside. As long as this next candle is rejecting the upside, we're pushing down, right? We're basically pushing down. Okay, where are we pushing down to? To our demand, right? To be safe, we take it to the recent demand, right? However, this whole area is a recent demand for us, right? Yo, we're coming to entries on the 1 minute time frame. We're coming to entries on the 1 minute time frame. The 1 minute time frame is just for precedent, you know. So to read that point, you gotta understand everything about the hard time frames, the entries, where are they coming on the hard time frame. So for you to understand what I'm gonna do on the lower time frame. Right? Perfect. So remember, this whole liquidity pool is what? Is our demand. And if we want to look at the daily, we got the bulls, right? We got the bulls, and inside this bulls, we got what? The recent price, the recent activity, the recent supply, right? Basically, the recent supply. Makes sense? And that's when we came all the way down to the 1 hour. And we got this one over here. We got this one. And we got this one. Makes sense? Okay, again to the daily. So this daily, this daily. Opened, pushed up, pushed up, pushed up, pushed up, and then pushed down, London, then boom, cracked up. Backward to the bows, right? Backward to the bows. So next daily opened, next daily opened. So rationally, let's delete everything. Rationally, this daily opened here. This daily opened here. And we had this recent supply, recent demand, sorry, pardon me. We got this recent supply now. And we got this recent supply too, right? Our behavior is what? Is bearish, right? Because we got nothing to shift from at all, at least till we come to this daily demand. But however, even looking at the weekly too, well, see how many elements are we connecting at the same time. And that's why when you ask me for a confirmation, it's meaningless. It's like meaningless for me. Because see how many confirmations we getting before we even thinking about executing to. On the weekly, we know for sure that, okay, this is our station. This is where we can shift from. Okay, back to the daily. So bearish pressure broke out, retest, minor retest, or micro retest of the breakout, right? Push down, daily grab liquidity and pushed up again, which is, if you want to think about it, where is my, so we had push to the downside, right? Retest, downside. Okay, what's inside this? If you want to zoom in, what's inside this is this, and this, right? And then the new daily opened, it created a what? A macro rejection, or rather intraday rejection, and then push down. This here is the zoom in of just one swing. You can see it loud and clear. You can see it. Down, pushed up, down, intraday correction, push down, a new day, again, intraday correction, the recent supply, boom down, price reached a daily bulls, shifted up. See the magnitude. Notice the magnitude of the levels. Shift, daily closed, new daily open, created a higher wick, back to this recent supply, then down. Does this make sense? Okay, what if We want to understand more details about this, right? What if we want to understand more details about this? So this here over here is the first entry, right? Down. This is a TP. 1, because this should be here, your TP2. But for me as a scalper, this is my full TP. I'm out. Good. Now as it's progressing, got rejected. Back to this recent supply. This can be the first touch sell too. An example of the first touch sell. Sold off. Pushed back. Nice closure. And what's the behavior of this closure? Now, those are the kind of pretty much interesting questions. This closure over here, what's the behavior of this candle? This is a liquidity candle. Means higher wick, we're going down. Right? Push down. Still remember all of this here is a liquidity pool, right? All of this here is a what? Is a liquidity pool, right? So the only rational entry is this sell over here, this sell over here, this sell over here because it's inside this liquidity wick, right? And then this sell over here. Why is this sell over here? Because we got out of this liquidity pool, first of all. Our target is going to be this demand over here, right? Target is going to be this demand over here. Down. First, rejected, pushed up, came back to the recent supply, right? Pushed down, again rejected from the demand. Still, this candle liquidated this what? This candle liquidated this demand. So what you can do is you can be selling this candle too. Those kind of trades are sniper trades. It's not like this is not a sniper trade. This is not a sniper entry. No, this kind of entries are sniper entries. Those kind of trades are sniper entries, sniper trades, basically. And remember, you got your own bias already from the higher time frame, from the daily. You know for a fact that we're pushing down, but still you want to be more aware that we got this daily box, which can still get rejected from here, push a little bit up and get rejected from here, and then push down. So you don't know yet. You don't actually know yet. You just like your job is participation and anticipation of the movement, right? Okay, let's delete all. Let's delete all this. With a recent supply again. We got recent supply too, right? Let's take it step by step as we are progressing. Can we actually come back here in a minute? Oh, nice. Nice, nice, nice. So this is basically your first sell, right? Wherever you want to take it, it's up to you. Just want to take it here, it's up to you. You want to take it all the way down, it's up to you. Want to take it here, it's up to you. What I do is I rather be always aware of what I'm doing. Just take it to the recent demand. Yeah, I'm gonna be missing pips stuff, but I don't look at it from this perspective. However, all right, let's chunk it hourly by hourly. Good. Let's chunk it basically hourly by hourly. So what this candle did, dude. All right, this is the first hourly, which is this hourly over here. This closed up bullish, you can see it, then consolidated, a new one dropped. Came back to this recent demand. Came back to this recent demand and pushed all the way up. So now it cracked your price, right? Now it cracked your price. Your first sell got triggered. Makes sense. That's the behavior of this candle. It pushed all the way down first, got rejected. Why? Why did it get rejected? Because if you want to look at it, you got a recent demand over here, right? You got this whole area as a recent demand over here. Boom. Triggered, pushed up. This is none of your business. You shouldn't be even trading this one, because your main focus is coming from the daily to the hourly to the minute. It's not from the minute, vice versa. Good? It's not from the minute, vice versa, because you can find tons of trades of just like going from the minute, vice versa. But what we're focusing on is shit that works 80% of the time, 90% of the time, 85% of the time. Good? That stuff that works most of the time, right? That's what we're focusing on. That's why we coming from all the way from the daily to the 4H to the hourly, all the way down to the 1 minute to execute. Good. So this is your first touch sell. First of all, this is your risk entry. That first of all, that got executed. Good. This is your first one. Now remember, each hourly gives you a trade. Each hourly candle gives you a trade, right? So now forget about this supply. It's done. Why? Because we reacted to it and we created what? We created a recent one. Guys, this is the trick in trading. Good. This is the freaking fucking trick in trading. Good. Nothing else. This is the actual only holy grail in trading. Recency, being super recent in the market. That's why we humans struggle with trading, because we fail to be recent with the market. Good. So this doji closed. and we understood the behavior of it. So we understand that we got liquidity all the way down to where? To this demand, right? So it's either going to react to this one here or to this one here, right? This keep on being recent. So it's either going to react to this here or to this here, right? Makes sense? Perfect. So new hourly opened. New hourly opened. New hourly is absolutely freaking fucking bearish. It's 100% bearish. Remember, for those who's asking about confirmations, how many confirmations we got so far? Are you super fucking confident selling this or not? I want to see yeses or nos. Are you confident selling this? So you're absolutely confident selling this, right? Not just liquidity candles. You also got tons of freaking what? Of freaking confirmations all the way up from the daily, weekly, 4H, 1H, all the way down to execution point, which is the 1 minute. Right? So how are you gonna sell this? So this is your basically what? This is your recent supply. Looking at it over here, basically this is your recent what? This wick over here is your recent supply, right? So already closed, you already opened. Where are you going to be selling at? You need a recent supply, right? This is a recent supply. This is a recent supply, right? But however, this is your main recent supply, which is how much? 14 pips, right? So you got another sell. However you want to take it too, right? Makes sense? Yes, no, please. Yo, don't ask irrelevant questions. It's irrelevant. It's irrelevant. We already got our confirmations from the higher time frame. All what we're doing on the hourly and on the 1 minute is just to get freaking good risk to reward ratio. That's it. No, don't do freaking DCA. Don't do DCA. Don't stack. Don't DCA. Don't stack. Good. Done. Ratio demand. We got out. We good. We clean. We all good. So what we got is, see how lovely freaking fucking trading is. So all of this here is what? is a recent demand, right? What's inside this recent demand? And here where you get stuck, basically. Here where you get stuck, because once it approaches this area, you're out. So price pushed, rejected. This is our recent supply over here, right? This is our recent supply. First touch. Sell. Again, it closed what? It pushed all the way down actually, and then back up again. Did what? Closed with major freaking liquidity. So this here doesn't interest me no more, right? What happened here doesn't interest me no more because this is my left now. Whatever I'm doing, this is my left. This is my actual left now, right? This is my left now, right? Whatever I'm doing, whatever happened here doesn't fucking interest me. This is my left now. Even this doesn't interest me because now this is my left, right? This is my left. So moving forward, get this back here. So it pushed all the way back up. Yeah, pushed all the way back up, coming from this liquidity over here, pushed all the way back up. Good, left, makes sense why it's pushing, nothing to the left. Got rejected. Keep on pushing up. The recent supply. Now, what we got is, we got second touch. But remember, each hourly gives us one trade, right? Each hourly gives us one trade. So, however, if you want to sell this, it's up to you. If you want to sell this, it's up to you. If you want to wait the closure, it's also up to you. However, it closed bearish, bringing what with it? Liquidity. What does that mean? This candle over here is dropping a higher wick, then continuing down, right? Recent supply. Also selling, right? Hourly close. Hourly close. New hourly open. Still at demand, right? Still at demand, refusing to break below demand. We got validation. Then change of behavior, right? Where is it going to now? Where is it going to? What's my most recent supply now? Where's my most recent supply now? This is my most recent supply. And after this rejection and this closure of this candle, this was my most recent supply too, right? It's getting messy. It's getting messy. It's getting messy. Do you understand? Is it clear for you? Guys, please, yes, no, yes, no. I don't know, this for me is messy, but so after this closure and this candle dropping all the way down and closing like this is the wick of it. The hair wick is my recent supply, right? So that's where it closed. So the wick of it is my recent supply. And what's the recent price in this supply is this price, right? Although this whole thing is my recent supply, that's why my stop is above it, right? That's why my stop is above it. TP, right? And then this closed, this opened that we sold and closed bearish, absolutely bearish inside this candle is another indication of like, yeah, we bullish, we bearish. But remember, we still inside this freaking liquidity area, liquidity pool, right? So what's my recent supply now? This week, right? Now this is my recent supply. So this candle opened, pushed all the way up to this recent supply. Okay, before that, okay, what's the recent price in the recent supply? This over here, right? Makes sense? Perfect. Damn, this closed bullish now. This closed bullish. Where did it close at? This closed bullish. This closed here bullish. Yet this closed here bullish. So what are the options that we might go back to the recent supply again, right? But this then is going to be speculation. And I got 1, 2, 3, 2, 3, 4 trades. So I'm gonna close all basically. I'm gonna close all. Good. Closed all. And this pushed all the way up, closed bearish. Okay, at this time, at this point, you'd be like, okay, damn you, damn you, damn you, damn you. So now this whole thing over here is my recent supply. Good. This whole thing over here is my recent supply. And this candle closed. This candle closed over here. This candle goes over here. So what's the recent prices I got inside? Is this, right? So it's a recent supply inside a recent supply inside another recent supply, right? So now I'm sure that I'm positive that I want to sell this, right? I'm positive. I want to sell this candle 100%, right? So you need a higher wick tapping into the recent supply. Wherever it is, stop loss, right? However, we got this recent demand over here too, right? We got this recent demand. So price came close to it, but it didn't actually tap in it. Good. But anyways, talking rationally and talking like life-wise and real trading, seeing it coming all the way down here and dropping this way, I'll be booking my profit. Good. I'll be booking my profit. Then price shifted. Price shifted. Good. Then price shifted. Where is my recent supply in the equation? Delete this. This is my recent supply in the equation, right? This is my recent supply in the equation. Coming here, which is this. But look at the lid. Let's cover this or read into. Or if you don't want to cover it, it's up to you. So price predicted shifted. Now we got what? Now we got a bulls too, right? We got a bulls, we got New York open, reaching recent supply, and our whole freaking bias is bearish too. We got what? We're selling, right? We're taking it to this demand basically. Stop loss. Okay, let's study this recent demand and see what's up with this recent demand. So this is actually what's up with this recent demand. And this one here too. So let's delete it. Good. So got rejected now. We're leaving the chart. Got nothing to do. Where is our recent supply now? This is our recent supply, right? This is basically our recent supply, which is also a bulls at the same time, right? Which was also a bulls at the same time. So while we anticipating the fact that this rejection might come all the way up here, right? But due to momentum, to the heavy selling pressure and momentum, we got this bulls also too, this lower time frame bulls, which is an hourly bulls. Even on the minute too, that we might reject from here. But still, this is pretty much speculation too. We don't want to get stuck in it. So I'd rather wait another hour for the market to guide me, right? So this hourly basically, bearish hourly close, this bearish hourly, new bullish candle opened, closed. You can see it's bullish, but kind of ranging to. It's bullish, but ranging to at the same time. Then we got We got this bearish candle closing. Now, what's the behavior of this candle? This candle liquidated this. So we're pushing down basically now. Now we're pushing down. Once we push through this, 1832, we're pushing down basically. So this bearish candle closed, right? So what's up? What's up? Where is my recent supply now? So this was my recent demand, right? That got rejected and flipped into a bulls, right? Rejected and flipped into a bulls. So what's the most recent activity in it? Is this bullish wick over here. So we grab it and take it. Okay, looking at our chart, what's the most recent stuff in here? Supply, sorry, what stuff? Is this. Yeah, this wouldn't have triggered. This would have been triggered. Yeah, 28 pips. This is too much, 28 pips, but whatever. Because we anticipating the fact that we going down. The left, you can squeeze more, but you can see it, right? Wherever. Good. Down, got tired. Long story, short story. $47. This sell. Yeah, because it came to my recent bulls and recent supply. That's why we took the sell. Well, we took it were to the recent demand. This was basically an illustration of how you can connect all time frames from daily to all the way down. Especially the hourly and the 1 minute. Especially the hourly and the 1 minute. So, any questions? Yeah, you need to practice. That's why I gave you the institute. Honestly, normally when I used to do boot camp, it was just like 2 days me talking and that's it. But this time around, I was like, yeah, let's make it different. Let's let them utilize everything. So we gave you 3 months at first for institute, and then I changed my mind, gave you for 12 months on the Discord. So now it's just you after that, you going through all the content in the institute, practicing, coming back with questions, etc. It's gonna take you a bit of time. It's gonna take a couple of months, but it's gonna be legit. It's gonna be 100% freaking legit. Game changer for you. Nothing. What to do when price don't reach a recent supply and demand? Nothing. Don't do nothing. Stay away. Don't touch nothing. Don't touch nothing unless it tells you. Like this one here. So this one here didn't reach our recent supply, right? Our recent supply, but it reached our recent bows. But however, it was coming from a strong demand too. Like look at this size of this candle. Look at the size of this nasty candle, and look at the liquidity inside this candle too. Look at the price, how many times kept on rejecting and giving like buying opportunities. Look at the 1 minute. Look at the 1 minute. It kept on playing around. So till it broke out over here, that's when we knew like, okay, game over. Yeah, take a couple of minutes to consume and tell me if you guys got questions. Yeah, I guess we need a 10 minutes break. Tired. Oh, it's tired. Okay, 10 minutes break, guys. 10 minutes break. Yo, folks, I'm back. Yes, you can ask. Drop your questions, guys. Yo, Alex, we'll come to this. For sure, we're gonna come to this. This candle, yeah, it liquidated this low, but still we got a demand. It's something I've learned about gold over the years of my experience. Is you never neglect one single price, one single sensitive price. You never neglect that. So you don't leave yourself in a vulnerable position. Yeah, I place a limit or I execute manually. It's up to you whether you want to drop a sell limit or execute manually. No, the top wick is considered as recent supply. And here too, you can consider it as a recent supply, and it's supposed to, but we got a more valid bows, stronger recent supply. So this is it. Any more questions? The one on the agent session. This one? Because this whole area is a demand. This whole area is a liquidity pool. So you want to sell the top of this one. No, why? This is your recent supply inside the entire wave. This is wave one, correction, wave two, correction, wave three, correction, wave four, correction, five. Perfect. Yeah, definitely. Yo, G, yeah, sir, that's exactly how I trade Bitcoin. Like that's how exactly how I traded Bitcoin. And I shorted Ethereum, BNB a couple of times just based on my system. Yeah, I'll do that on Bitcoin definitely, but at the end of the session, just like because we got like, I don't know, an hour left, I'd like to continue the rest. So, okay, thanks, man. Yeah, Bitcoin at the end, please. Discussion about Bitcoin is at the end, so we can just get done with what we gotta do. Yeah, definitely. They're the same as liquidity zones. However, liquidity zones are like a deeper liquidity zones. They got like a couple, like 2+ buying or selling prices in it. It's just a deeper one. Any more questions, guys? Yes, no, please. Yeah, definitely. I'll apply more examples. Definitely, I'll apply more examples. The thing is, we short on time too, and that's why you guys got like that 12 months access to the institute. But however, what we got left is psychology and risk management, basically. What we got left is psychology and risk management. Basically, psychology, you can, if you want, you can use it on, you can watch it on the institute. It's up to you guys. It's up on the majority of you. Oh no, I can't. Okay, whatever. So it's up to you, folks. But risk management, we gotta do it. And if you choose to watch the psychology on the institute without like me giving it to you now, we can do more examples and we can crack Bitcoin. So my primary advice, all what I've said yesterday and today is a primary advice. It's like literally every single word in the past, I don't know, 9 hours we took is major, but we're gonna crack the system, and I'm gonna tell you what's my primarily advice. Basically, let me just answer it. So the primary advice is knowing your system, knowing what session you're trading, when you're applying your 3 forces, and you're moving precisely. If you're selling, you said you should be selling a recent supply. If you're buying, you should be buying a recent demand. Good. This will at least give you an edge, sorry, to be at least profitable or end up in break even rather than a loss. And always just focus on one trade a day. That's it. One trade a day. All what you need is one trade a day. We're gonna talk about it now. And what's up with temperature? We're gonna talk about it now. We're gonna talk about it now and risk management, about like the trades, etc. No, I don't really have daily targets. Like, not really. Like, some days I make couple G's, some days I make 5 figures, you know. Once or twice a year I make like 6 figure a day, but mostly like on average I make, I don't know, between 6 to 14 a day. So I don't have a target at all. It's just like 1 to 2 trades. Okay, go to the Discord and send a message to Erkan. That's his name. That's how you write his name. Erkan. He's responsible for everything. Just send him a message on Discord, sorry, and he'll take care of you. Okay, so yo guys, so you all agree on the fact that psychology you studied from the institute. And I give you more examples and start tracking the risk management and building the system. Okay, please talk about psychology. You know what? Fuck it. We'll just like give you an extra hour. Fuck that. It's fine. No worry. So let's talk about psychology a little bit. All right, let's talk about psychology a little bit. Good. Let's talk about psychology. So what the major players in psychology are what? Are actually fear and greed, right? Are actually fear and greed. And what's included between fear and greed is actually building many psychological behaviors that can affect your awareness and behavior as a trader. Good. So when you're talking about greed is coming from the fact that you want more. We're all hungry. We all want more. But what kind of more that you want? And most probably greed is coming from an egoistical perspective too. Good. Because greed will drive the instinct of overtrading for you. So once you start overtrading, this is causing a pressure on your mental awareness. So if you're greedy in those examples, where's the math? If you're greedy in those examples, you can't be achieving those. Good. If you're stacking positions, you're going to be shaking no matter how strong or expert or professional trader you are. Good. The fact is, confidence eliminates fear. Good. Risk management eliminates greed. Good. Awareness eliminates ego. Okay, how do you achieve awareness, which is coming from confidence, which is by backtesting, practicing? I'm not talking about you just going in the night today after my session practicing for an hour. No. In fact, till now, I've been trading for 7 years. I still do practice every day, every Saturday in my life. But this Saturday, I spent 3 to 6, 7, 8 hours backtesting. Not backtesting on trading view or reply mode. No, I use a software called SoftFX, which is a simulation. So it's similar to the real life conditions or life market conditions. Good. So practice gives you confidence. As we talked yesterday, the difference between, or the learning curve between a student, practitioner to a master. Practicing is all about what? It's all about data. You trying over and over again, gathering data, seeing what works, what doesn't work. Okay, what works? You keep on repeating it, doing it all over again, etc. Right? That's the effect of practicing. It gives you confidence. With confidence, you're being much aware of the environment around you. And as I mentioned, you don't need to use your brain. You don't even need to outsmart yourself or the market. Nothing. You just gotta be the dumbest creator out there while you're trading. Good. You just gotta use your eyes, follow the market with proper risk management. Good. So is actually a flow of elements. If you got one damaged or an error in one element, it all eliminates itself. The whole formula will give you an infinity result or an error result, right? So, and it all goes down to one part or one element: acceptance. Do you understand even the effect of acceptance? Acceptance. So why don't I stack trades? Although I stack trades, but within the range of my risk appetite. So instead of executing 50 lots at once, I drop 5, 10 lots, 2 20 lots, 1 10 lot, 10 5 lots. It's up to me. Good. But why don't I stack? Because if I stack more than my risk appetite, and I force more risk exposure on my trading account, this will leave me vulnerable to my awareness, because I won't be aware of the environment around, especially if the trade starts flipping in my direction. Sorry, not in my direction, against my direction. So you'll be in a drawdown. You have a plan already. You start changing the plan. You start having hallucinations about different plans, that this is going all the way up to sky. This is going all the way down to $19, wherever the prices is or the condition is. The only fixed elements in the game are mental elements. And I think that has to do with a chart, a number. It's not fixed, because if you got fixed variables, if you got fixed values, then the answer is always fixed. The equation equals a fixed amount. But variables what creates different outcomes, right? That's the job of statistics. So it all goes down to the part of acceptance. If you lost, acceptance. Why did I lose? How did I lose? Why would I lose that? Like, let's look, for instance, at something. Let's say you sold here, you got stop loss. You go back and study it. Why did I lose this trade? You start cracking into it. Okay, I got demand. Price this week validated this demand. Okay, it went below, but still it closed above. The candle closed above, even it closed above this whole area too. So most probably price is gonna push all the way up to this recent supply, right? That's again when we say that a huge part of acceptance is you accepting the fact that, okay, I'm not gonna win all the time too. I cannot be winning all the time. And the fact in January or December, my win rate was 100% in December. So I tripped. I was like, how come? How come like it's 100%? I executed like what, 40 trades, 50 trades, something like that. It was 100%. So when I went back, studied my trades because I always journal my trades. I was like, yeah, okay, makes sense. All the trades I executed, I was pretty much rational and aware of my environment in that. Oh yeah, I got break evens, etc. But still it's like 100% win rate based on my forex book. So next month I got what, like 85. February I got like around 83. March I got 90. April I got 81, 80, something like that. May, I didn't even execute more than 10 trades in May. I took 10 trades in May so far. Because as you're progressing in your trading career, you gotta be looking at what works more. What works more. So if you have something that's working 70% of the time, and you have another set of events, or you have another set of data that works 85% of the time, and it's the actual event might occur more probably than the other event, then you stick to this event. It's pure statistics. So that's when we come back to this rabbit hole of mentality and psychology, which everybody is saying is like mental psychology. Yeah, 100%. The game is totally mental. It's 99.99999% mental. It's absolutely mental. But guess what? Mental game is fixed. Is a fixed game. It's not a variables game. Once you learn about yourself, once you understand your own self, you're good to keep on going. One thing I've noticed over my period of being a trader, ego. I've noticed on my friend, I've noticed on me myself, it's devastating. It can be demolishing process and results of years within a couple of minutes. Ego. So I get asked this question many times. Good. Since you're so good in trading, why aren't you making hundreds of thousands every month? It comes down to one question, to one answer, which is because I've tried over risking before. And one trade can put me down a couple of months back, or a couple of years back. So over the time, I've learned that consistency equals step by step. Some days, the actual growth curve is like this. Some days I'm gonna have a booster trade, gonna take me up, but I'm always growing like this. That's my growth curve. Then another opportunity like this might appear But when it sets me down, it's gonna set like this is my correction. Now a mad correction like this. Then I'm gonna keep on going, basically. Keep on growing. This one thing I've learned in a tough way, though, in a really tough way, especially my background, where I came from, the way I've been raised, where I've been living, being totally independent for more than 10 years of my life, living alone, etc. It was a major game changer for me to have more money. It was way, 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 way bigger. It was like last year, no, the year before in 2020, during COVID, I had more than 60 grand in my trading account. I sold Dow Jones from the top all the way to 18 grand, made tons of money, bought DG at 124, made tons of money, held it all the way up to 144, bought gold from 1564, something like that, made tons of bag money. And I lost 40 grand on fucking oil. I lost 40 grand on oil. I bought at $10 futures, though, not even CFDs, and it went to minus $3. Who the fuck would have expected that? But anyways, we move on. So the actual curve, my actual psychology was during that, gold took me up, Dow Jones took me up, GG took me up, and in one day, oil took 40 grand from me. No, I never expected it going to zero, bro. I use oil. You use oil. Everybody uses oil. Like, you use gasoline. Who the fuck would have thought it's going to zero? So this actually brings us subsequently to risk management. So psychology and risk management are connected. Yeah, just like Luna. Would have thought about it? Who would swear? Who would have thought about it? So coming to risk management. So let's say what a size of account do you start? Anybody suggest a number? Give me an initial capital, 50 grand. 50K. So you're starting your account with 50 grand. To absolute zero. It was devastating, though. It was devastating, that Luna incident. And that Luna incident is going to affect the whole bull run, the next bull run. I'm not talking about people investing 5Gs and 10Gs. I'm talking about people dropping hundreds of thousands, millions in the market. They are skeptical to wait for USDT. The time is coming for USDT too. In fact, in my own humble opinion, Yasser, the only thing that is trustworthy is actually BNB, because that Binance is equals crypto. Yeah. So back to risk management. We got 50 grand account. That's initial capital. So we pulled up the first day. We pulled up the first day. Yo, BNB at some point last year, I had like 700 BNBs. Actually, Yasser saw it. Had like actually around 700 BNBs or something. I love BNB. I love Binance. I love the way they're treating users. I always start at 50 grand. Good. Our risk is 1%. Starting the first day, we risked 500 bucks. We gained, let's say, 3 grand. Yeah, exactly. Man, Binance is such a solid company. So we gained 3 grand. Those 3 grands are what now? House money. Now forget about this 50 grand. It doesn't exist. It's just your margin. It's your margin requirement to open. Why big profit? You're risking 500. You're risking 500. Let's say 5 lots. 10 pips a stop. 60 pips. 3 grand. Why lots of profit? Good. So now forget about the 50 grand, the initial capital. This is just used for marginal requirement. So you can open this 5 lots basically. Good. And more trades and more lot sizes. So now what you got is you got this 3 grand, right? This is your house money. This is what you used to play with now. Next day, you want to risk 700 bucks out of those 3 grand. You made 4. So in total, you got what? In total, you got 7K in your account, right? Third day, you risk 1, you lost minus 1K. You're sitting here with 6K, right? Yeah, we're gonna talk about drawdown in a bit. So you're sitting here with 6K. Makes sense. So you lost a grand, etc. 1, 2, 3, 4. Yeah, fourth day you want to risk 500 since you lost a grand. So you want to take it step by step. Let's say you made 2 G's. Back again, you go what? You got 8K, right? Friday, you want to take it slow. I always take it slow on Fridays and Mondays. You want to risk 500. You lost 500, let's say. You got 7.5K in your trading account from your first week. That's you just executing 1 trade a day. 1 trade a day. 1 freaking trade a day. That's you just executing. Actually, am I recording this or not? Yeah, it's recording. So that's you first week. You got 7 G's, 0.5. Monday, you want to start slow. You want to risk 5. You made 3, or let's say 2. You got 9.5. Tuesday, you want to risk a grand. Okay, you're risking grand. That's 10 lots, right? Let's say you made 30 pips, 40 pips, 4K. That's how much you got so far. 13.5, right? Wednesday, you risked a grand. You lost. How much you got? 12.5. Again, you want to take it slow because you lost a grand. 500. Let's say made 1.5. You got 14. This is actual reality though. This is the actual freaking reality of trading. This is the actual freaking reality. Let me burst your bubble. You having a whole losing streak, a whole losing week, there is something wrong about you. And what you're doing. You losing 2 days in a row, there is something wrong about you and about your trading. Not joking. Losses mainly occur because we trying to outsmart ourselves on the market. Seriously. Or you hallucinating about a trade that went in your favor 30, 40 pips and then came back and you're sitting in a drawdown, you're expecting it to push 300, 400 pips more, you know? So this is the actual reality of trading, of money management, of house money rules. And poker. Poker is similar to trading. Good. Poker is similar to trading, especially from a house of like the house money rules. This is how you manage your money. This is how you manage your risk. This is how you multiply your money. This is how you multiply your risk. So we two weeks trading and we up how much? We up 30%, right? And what's the max loss we got? Minus 2%. Yo, if I lose 3 days straight, I go on a long break. I might take a month off if I lose 3 days. No, it's not about percentage. It's just about the fact that I lost 3 days in a row. Then there is something wrong about my head. Then my head is doing something wrong. Then I'm tripping. Then I'm drifting. So I need time away. Like this month, May, I don't feel like trading at all. So I've been just like doing what? Trading the 4-hour candles. Like someone, you're like so trade. You want to trade. You're so energetic. Someone's, you don't even feel like it. But it all comes down to, do you actually afford leaving the pedal, the gasoline pedal, for a year, 6 months, or not? Because if you're going through financial struggles, you shouldn't be trading. You shouldn't actually be trading. If you're going through financial struggles, you shouldn't be trading. Because trading is gonna just make it work. And then reverse your bubble. You don't need money, that big money, to make money out of trading too. Like I've showed it many times and like to the community and my community. With like 30 bucks, I flipped into a couple thousands. 100 bucks, I flipped into a couple thousand. A grand, I flipped it into 40 grand. It's, you don't need that. It's not about flipping. It's not even over risking. It's just like taking one decent trade a day and multiplying with house money rules. You just keep on multiplying. With 100 bucks in your trading account, you can be making 30, 40, 50 bucks a day. Multiply 22 trading days. Let's say you lost 10 days out of those. That's already 600 bucks. So that's the whole mentality and psychology of trading and risk management, basically. And don't you ever revenge trade. Don't you ever in your life revenge trade. You're just gonna cause yourself more losses. If you lose, fuck it. Tomorrow I'll make money. Easy. If you lose tomorrow and after tomorrow, then fuck it, take a break. Go like leave for 2 weeks. Don't look at charts or study your losses, but don't pressure it to, because instead of losing 3%, you're gonna end up losing your account. And always use a stop loss. And if you're selling, sell at supply. If you're buying by demand, strictly. So even if you are wrong, if you want to look an example, even if you are wrong, you still got the advantage. Still got this demand over here. So assume you bought this demand, right? Assume you bought this demand, this your TP over here, recent supply, stop loss, that's 1 to 6, right? You already went half ways, 60 pips in profit before you got stopped out or a break even, because me myself, once I'm structure wise too, once I'm like 10, 20 pips in profit, stop loss, I break even. I don't fucking care if I get break even. That's it. If I'm profit, I don't like being in a loss. In fact, the kind of losses I like, which is, let's assume that I'm buying this, stop loss, I'm buying this, wherever, buying this, and I get stopped out directly. This is the kind of losses I like, which is like, yeah, move on. But most probably up to 95% of the time, 97% of the time, you can do your statistics and run it and go back, study back historical data. If you buy and sell supply, buy demand, you won't lose much. You won't even lose 1 trade out of 10 trades. The only way of you losing is over trading, buying here. See a bullish candle, oh fuck, it's a bullish candle, gotta buy, right? Neglecting all of the details on the chart. You see it going all the way down, oh fuck, you gotta sell, then boom, it goes out against you. That's the only way you lose. You get stuck in between, you start selling down, you start buying up. Nah, don't do that. Even if you're wrong, even if you're direction-wise wrong, you're still gonna make money. You're still gonna make money. You're gonna see the actual probability of you being wrong is so low. Systematically, is so low. What makes you lose is your mentality. Purely your mentality. This is actually what makes you lose. Your mentality. Any more questions about this? Exactly. You have to start back from ground zero. Because if you liquidate your account, all what you're gonna remember that I fucking liquidated my account. You ain't gonna remember how many trades I was right, how many times I was right. But that's why the best thing to do is when you lose, you study your losses. You study why you lost, how you lost, the way you manage your trade. You had 100 pips take profit. Why did you cash out 20? You feel me? Okay, so we done like this with psychology and risk management. Good. No, I don't do nothing. If it hits stop loss, hits stop loss. If it directs, if it directly goes into drawdown, I don't do nothing. But if I was in 20 pips profit and 10 pips profit and it came back and I'm out of a sudden in minus 10, 15 pips of drawdown, that's me being dumb. I don't allow drawdown. If it directly takes me into a loss, stops me out, or it directly goes in drawdown, I don't mind. I don't care because I'm already good with the idea that I raised this amount of money and I'm losing it, or I'm gonna make money out of it. Doesn't matter for me. But if I'm in profit and I leave myself to come vulnerable to come back in a drawdown, this is when I'm gonna get pissed at myself. So as long as I'm good with my risk management and the amount of I'm risking and the lot size, etc., I don't mind. But it's so important that if you're in a win, if you're in profit, don't let it come back to a loss or to drawdown. It's fine. It stops you at break even. Then you're either gonna rebuy or you're either gonna sell. You know, it's gonna give you a new window to enter a trade. Yeah, sure. Why am I using 30 minutes? It's a part of the game. I have tons of break evens. I get tons of break evens. But that's why when I open a trade, I risk 2%, I close 1% at 10, 15, I don't how many pips, and then the rest I break even. If it comes back, I don't care, you know. Because again, you gotta look at what works the most. You gotta look at what works the most. All right, let's look at this. If we go to the minute, very nice. Still the same. Perfect. Okay, so here is what? Here's my recent supply, right? Here's my recent supply. So what I'm waiting for, I'm waiting the next hourly to go up, then start going down, right? All the way down where? To this demand, right? Which was a both. Was supply, broke out, both, and it's a demand over here. Yeah, it might liquidate and goes down, but just goes for what's sure, you know? Rather like getting 30, 40 pips quick in a couple of minutes or an hour than sticking for like hours to get 60 pips. That's a different mentality too. That's a different mentality. So going to the minute, I got also a recent price over here, right? I got also a recent one over here. So what I'm gonna do is this is my risk entry, right? My stop loss on the minute. This is my planned scenario, right? This is my planned scenario. So let's run it. Looking at the hourly. No, that's not what I don't fucking like about this trading view of live move. Just because I skipped to the hourly. What was that? Ah, doesn't do that. Doesn't do that. It's so dumb. The reply mood in here. Wait, so now what we got this recent supply, right? We got this recent supply. Inside this recent supply, you got this stop loss above the high for the recent supply. Good is the entire week. I want it to be full speed. So structure wise now, as long as it's gonna break below this here, my stop is gonna be a break even. So now my stop is a break even basically. Now basically my stop loss is a break even. Ring get stopped out. In real life scenario, what would be the cases? We got a position here, right? We had a position here, and this position pushed first 16 pips, 17 pips. So one position would be out, right? Half the position would be out. So even if it came back and stops me out at a stop loss, I'm gonna lose what, 9 pips out of 16. So I'm gonna go home with what? With 7 pips. It's actually 17 pips. So I'm gonna go home with what? Let's say, yeah, 7 pips, whatever. Good. So that's a real life scenario, basically. And as it's approaching this area over here, and drops this candle, I'll be going up. That's a real life scenario. That's basically a real life scenario. Then the second position will be a break even wherever. This closed, close, let's stop it. So this hourly close now. So now what I got is, I got a hell of a fucking wide supply area, right? Now what I got is, I got a hell of a fucking wide supply region. I want this, got a hell of a wide supply region, right? But just you need the chart. Just look at the chart. Inside this wide supply region, I got this demand too, right? That now it should be acting as supply. So if we look at the minute, what we got is we got this wave, right? We got this wave. What's in it? It's up to you if you want to put it from here. Stop loss above. Or if you want to take the mean of it. Stop loss above. Where are we going to take it to? All the way down to this next demand, right? Yeah, this was my Friday trade on ID. Yeah, I'm gonna do Bitcoin. I'm gonna do Bitcoin. No, I'm quiet. I don't talk when I'm trading. Just waiting the next candle to open now. It's like there is nothing to talk about. Okay. Oh, wherever. New already opened, basically. So new already opened. Where is it gonna go to? Where's the new already is gonna go to create a lower weight? What is the recent activity on our chart? This over here, right? So if it comes here, I'm buying and looking at looking at my hourly, came all the way down from this demand, closed above this demand too. So where is it gonna go to? The supply over here, right? So slow. We missed it because there is no way on earth I'm gonna buy here. There is no way on earth I'm gonna buy here. This is not solid for me. What's solid for me is this one over here. Because yeah, makes sense. From here, there's liquidity, push down, came back, so it's a source of liquidity. So it makes sense for me to buy. So sometimes, unfortunately, sometimes you will have what? Sometimes basically, sometimes basically what you're gonna have, you're gonna know what the heck is happening. Where is the price coming from? Where is the price going to, etc. You're gonna know absolutely what's up, what's happening, but you can't get an entry. So you don't force an entry, right? You can get an entry, so you can force an entry. Of course, in a life condition, it's different because it's way boring. We finished like 1, 2, 3, 4, 5, 6, 7, 8, like 10 hours worth of chart in a couple of minutes. So of course, it's gonna be different in life condition. The minute is going to be passing as like it's like an hour if you're in a trade. Bitcoin. All right, so Bitcoin coming from the monthly, first of all, coming from the monthly, good. So the first stop that I predicted to 30, basically 30 grand. This was the first stop that I took. This the second top that I sold. Sold two tops. Good. So the first stop, I first look at the confirmation of the candle. So this was bullish with liquidity to the upside, means the next candle is gonna push to the upside to fill this liquidity, right? Then this candle closed almost above the previous weight, right? So far there is no indication that price is gonna go down, right? But then this monthly closed. We discussed the Doji and the behavior of this, forget the name, call it, I don't know, Khalid or Amber Heard or whatever, Johnny Depp candle, whatever you want to call it, call it. What important is the behavior of it. Good. So this closing like this, giving us a recent supply, right? Especially on Bitcoin, there is no left. It's all new charting, right? And don't forget that we had a cycle. 1, 2, 3, 4, 5, 6. We got 6 bullish candles. Remember what I told you about. Go study it. Don't just take my words. Go study it. Go look at it. A wave, a bullish or a bearish wave contains 6 to 7 bullish or bearish candles. Good. So with this closing, this behavior that we discussed, because I'm tired of repeating what we discussed. So means what? That next candle is going to push all the way down to where? To 30, right? Why 30? If we look at the weekly, what we got is that's why time frames connection is lovely. So we got a recent demand on the weekly, right? We got a recent demand on the weekly. And on the weekly, although that first week over here showed us a what? A weakening signal, right? A weakening signal. That's when the monthly confirmed for the next month and we kicked in all the way down, right? That was the first bottom. So definitely now we're coming into a weekly demand. After discussing the effect of weekly demand, what do you expect from here? What kind of entry is here? What kind of an entry is on this weekly demand? Answers. Shift. Perfect. Is a shift. So where are we going to shift to? Most probably, it's either we're going to come here, right? Or come to this recent supply, right? Or come to this recent supply. So back to the monthly. Because we're talking about long-term trades. We're not talking about something that is going to develop in a night. We're talking about long-term stuff. And we started with the whole thing from the monthly. So we got to keep on tracking the monthly. Good. So this is more recent supply, right? At this point, price closed where? It closed above, right? At this point, price closed above this recent supply over here, but still closed within the range of the supply. And then next month, we got a bearish candle closing, giving us what? As people say out there, like double top, which is something I don't fuck with at all. Good. But however, let's understand the behavior of this candle, this bearish candle. First, bullish pressure was great, that pushed above the previous candle. Bearish pressure was greater, that pushed below this wick and closed below the close of the previous bullish candle, right? What does this mean? We're bearish, right? What does this mean? Now, we absolutely bearish, right? Now, back to the same cycle, studying the main cycle. Where did this all of parabolic start from? $4,000. Before that, 3,400. I still remember this because I bought a 3,400 and I sold like a dumbass at 27, but wherever. Good. And then we had this recent supply. And this was where prices start liquidating this recent supply from 10 grand area. And then this candle liquidated this whole supply and gave us this both, right? So as a complete cycle of this bullish cycle, where is it going to go to? It's going to go to 20 grand, right? It's going to go to 20 grand. But however, you also can understand the cycle more better too. At first, we had this weekly demand, right? Price reacted to it. We got 1, 2, 3, 4 ranging weeks, for like a month ranging week. Then boom, liquidate, boom, down. Ranging. Where to? To the bows. Down. Now the funny part is, where was my entry at? I'm still holding my trade though. Where is my stuff? Wherever. So on the weekly, it dropped, right? Because I cannot sell this. And this week was the closure of this month, basically, right? So I'm selling the new month. I'm selling basically the new month. Go to daily. That's where I'm selling the new month. Again, it's the similar foundation as the hourly and the 1 minute, right? So this the old new month. Recent supply. Recent supply. Now remember, what's the difference now between the daily and the minute is it's set fucking daily. Good. So if you get a minor supply on the daily, that's a freaking legit supply. Remember the daily and the weekly. And this also supply coming from this bows too, right? To the left, coming from this bows. So what I was waiting for from the monthly is just the higher weight. I actually had 10 lots running on Bitcoin. Closed here this week, 9.5, and I kept 0.5 running. Yeah, 0.5 now they're like a 15 grand profit, but can I assume if I had like kept the 10 lots, how much was that? But I needed my margin because CFD's trading on Bitcoin is crazy margin wise. Gaps. Forget about gaps. You're not trading the agent session anyways. Plus, if the gaps is being filled, bro, there are not the money. There are like not that many gaps on gold though. if the gap is being filled within the first hour, then forget the gap. If the gap is not filled within the first hour, then it's fine. And forget about the gap, especially if you know your bias from the higher time frames easily. And gaps occur when there are lots of fundamentals happening in the weekend. And anyways, you ain't gonna be trading Monday open too. Okay, we done, folks. We done. It was like a really exciting 2 days. I really enjoyed being with you guys. Hope you all benefited out of this. It's a really pleasure, you know. Now, what's next for all of you is you go back to the institute and you grind every single video in the institute. You know, back test, back test, back test, back test, back test, back test. You keep on back testing. You literally keep on back testing.